let's make a start with Netflix, because you may recall that a couple of weeks ago, whatever it was, I was saying that Netflix shares had proved to be pretty much tariff proof when they came to the effects of how the markets had reacted pretty much across the board with the Magnificent Seven. People talk about the Magnificent Seven as if it's a homogenous block. Netflix, is it really part of the Magnificent Seven? It used to be. It is a FANG stock. It's the old FANG stock.
Yes, if you think back to that.
And if you want to go back that far, but the numbers were pretty decent.
Yeah, they were. I mean, there wasn't really too much to complain about with regards to the earnings. And yeah, actually, I think, earnings season so far, obviously, we'll get on to Tesla momentarily, which was pretty disastrous. But by and large, I mean, there have been in terms of reporting season, there has been a lot of negative guidance and various scenarios being outlined in guidance. But I would argue that on the whole, earnings season hasn't been necessarily as bad as everyone had feared. But then it's probably too early for earnings to have turned south, given the timings around tariffs and everything else that sort of started at the beginning of April, so after the end of that first quarter.
Interesting. I'm just looking at my chart here. Netflix shares today are on the cusp. Well, actually, they are hitting new record highs.
Well,
so, what does that tell you? When you actually look at the Q1 trading update, headline numbers all came in ahead of forecasts. Net income surged to $2.89 billion, well ahead of the $2.4 billion that was in their previous guidance, and there was a big leap in operating margin to 31.7%, well above the forecast.